Aisha, longest winning streak in the last 30 months means that this is one of the biggest winning streak we've seen actually post-COVID.
Yeah.
And it's quite amazing that what a comeback it's been. It may not be like a fantastic comeback in terms of the mid and the small cap stocks, but yeah, it's been a very good comeback. It was largely supported by reversal in flows and the fact that globally markets are no longer worried about what is happening with some of the regional banks now. I think there is still upside left in terms of where the near-term trends are. While IT may spoil the party, but the upside which will come from banks will ensure that the two wheels, in a sense, are balancing each other. The participation is still very low. The average Joe on the street is still feeling that this market is not going to sustain. So I would continue to remain optimistic in the way how markets should move in the near term. But yes, IT is now in that spot where everyone is saying that is this like a reversal of, let's say, what we saw in 2008 or in 2012-13. The kind of indications what we've got from Infosys, which we'll discuss separately, is a clear indication that bad will get worse before it will get better.
Yeah, it's pretty much going to be a tug of war, I guess, between Infosys on one and HDFC Bank on the other today.
Yeah, but Infosys, if you look at standalone, what has gone wrong? Uninspiring commentary. A quarter ago, you've come out and you've increased guidance, and then you come out with results which are even way below the most conservative estimate. The forward-looking comments, even though what they're talking in terms of FY24 numbers, versus what they actually have delivered for the quarter gone by, it just does not inspire any kind of an confidence. So the turn what Infosys spoke about, and if you do a relative comparison of TCS versus Infosys has been nothing short of an howler. And these numbers in a sense just raise question mark that has the management got their assessment of the business cycle wrong, or this is just a volatility which will pass through. So I'm not at all surprised with the kind of brokerage downgrades which have come out from 10 to about 15%, 10% being the average and 20% being the highest. That is the kind of cut what brokerages actually have come out with. And this is a very well owned and a very well tracked stock. Now on that kind of a stock, if the miss and if the brokerage downgrade is so large, it just tells you that analysts were completely on the different side of the fence, so to speak. I mean, and when the markets are surprised, in this case, when they are shocked, it will lead to a massive derating in the stock in the near term. If you frankly look at Infosys, it has been the better performing IT stock. It has not fallen the way Tech Mahindra or HCL Tech has fallen. So, A, the outperformance will now be challenged. B, derating will start. And third would be the weightage what it has on the Nifty will have an impact on benchmark indices.
But don't you think, Nikunj, to a certain extent, TCS was a bit of a precursor as to what we may expect, or was Infi a complete shocker on the downside?
No, Infosys has been a complete, shocker, Avan. And I'll tell you why, because along with the Q3 numbers, they came out and they increased their guidance. And Q4, and you completely, change the commentary and you change the numbers completely. So you got to ask yourself is that what has changed in between that quarter? And what
how
has...
did you not see it coming?
Exactly. Yeah. And even if you, let's say, even if you did not see it coming because what was happening with US regional banks, you would say that, is this just an extension of the bad news? Because there is no guarantee that by end of this quarter, things will actually start looking up. I guess from a market standpoint, and what our viewers they need to understand is one simple thing. IT companies will go through their bad patches. How is this different from 2000? How is this different from 2008? And how is this different from 2013? If this is a slowdown of 2023, is this going to last for 2, 3, 4 quarters, which historically all slowdowns have lasted, or this is just a passing phase where the drop has been unreal and the comeback would be also V-shape? Will it be like that COVID kind of an situation where the drop is very sharp but the comeback is real?
This is in some sense also a transitional phase, right? The world is moving towards AI, and that's the commentary from most of the IT majors, that it's AI that they now have to look into.
See, Aisha, their deal wins have not been bad. So if you think about it, that while clients are going easy in terms of spending, in terms of their bringing the entire decision making back, the deal wins have not been that bad. That makes me optimistic that it is not as dire as what the world looked like, because the first impact would have been captured on the deal wins, which is not bad for TCS and Infosys. Also, the IT positioning is not that grand. It's gone through in 1 year of underperformance. So at some point in time, IT will become a classic contra buy because you want to. There is a factor of buyback also which is at play. But I don't think we are there yet. The question what markets would monitor now is that will the bad get worse before it gets better? Are we now reaching the abyss in terms of contraction, or this is just a passing phase where 2 quarters later it's going to be back to square one or back to normal?
Yeah,
In
that
fact, let's hear out what the management had to say explaining this kind of a performance.
In Q4, we saw changes in the market environment. During the quarter, we saw unplanned project ramp downs in some of our clients and delays in decision making, which resulted in lower volumes. In addition, we had some one-time revenue impact. While we saw some signs of stabilization in March, the environment remains uncertain. This led to our Q4 year-on-year growth of 8.8% in constant currency and quarter-on-quarter decline of 3.2%. Our operating margin was resilient at 21% for the quarter. We had $2.1 billion in large deals in the quarter.
All right, that's Infy. It was all in all a disappointing set of numbers with the decline in their constant currency terms, revenue guidance as well being lowered, all being taken as a huge disappointment as we discussed. But let's move on to the other big number then, and that's HDFC Bank that came out with its earnings on Saturday. And you have the NII and profits that did jump. You have lower credit costs, which did manage to cushion the rising OPEX. Asset quality as well improved, and the management in their conference call did say that the margins will remain steady despite the rate hikes and that they will keep building on their branch network. Deposit growth as well due to new liability relationships is likely to grow. So Nikunj, how are we to look at HDFC Bank's numbers? It was a little bit of a miss on the operating profit front.
Look, they are not like real rara numbers, but these are okay numbers. They are unlikely to have a collateral damage per se on those. Remember, the stock now is almost at a 52-week high. Large part of the underperformance in HDFC Bank, that is actually behind us. But markets, I guess now in the near term would be all about the proposed merger date. That's where the management has given you crystal clear commentary in terms of where and how the merger is likely to move in terms of timeline. So I think that is what will make market excited, at least in the near term. In terms of growth, impressive. In terms of CASA, still very impressive. Operating profit are also a function of a lot of other levers. I don't think there is a problem per se in terms of the basic operating line. But for me, what really matters is in the near term, what is the challenge for banks? It is fight for CASA. And that's where I think HDFC Bank is gaining market share. And if they continue to gain market share and if the merger goes through, the stock, which in a sense has been an underperformer for last couple of months, has now started outperforming. And it may continue in this phase of outperformance if money rotates out of IT back into banks. So there are very few large cap stocks where markets are deriving comfort right now. And money is going to move out of IT post TCS and Infosys numbers. And that money will go back to banks. And that's where I guess an underperforming stock like HDFC Bank is going to gain immensely.